You know, we've seen a lot of turmoil in the economy, in the markets recently.
And so is this a good time or a bad time to be investing in stocks? I think a lot of us wonder about that. And our money expert, Bruce Helmer from Wealth Enhancement Group, joins us now. Bruce, this is a tough one because sometimes when you see the volatility or you see things down, we're not professional investors, so you sort of are like, okay, is this an opportunity or is it just too crazy right now that maybe we should wait for things to calm down?
It's a great question, and I'm never insensitive to people getting nervous when markets are skittish like they've been so far this year. I totally get it, and I understand it, but the reality is that everybody watching me right now, probably if I asked you, do you understand the concept of buy low and sell high, they would say they do. But when they're emotional, fearful, then sometimes they don't make rational decisions. So even though I don't know what the market will do tomorrow or next week or next month, it could go lower. I do know it's between 15 and 20% lower than what it was at its high. So I see that as a tremendous buying opportunity because the market's on sale right now.
So that's my question, Bruce. If you had some money that you were trying to decide, do I want to put this in the market or do I hold back? You would say go for it?
I would, but it always comes back, Heather, it's a great question. It always comes back to time horizon as to when do I want to use this money. If I'm saving for a home project or a remodeling or a new car or paying for a wedding a year down the road, that money's got no business in the market, no matter how the markets seem to be doing in the short term, because we don't know what will happen. But for long-term money, your 401k plan, your retirement plan, money that you're not going to touch for 15, 20, 25 years, that money should be mostly in stocks. And a lot of people are looking at their 401k saying, should I get out of stocks or should I stop contributing? And absolutely not. It's a great time to keep contributing or even accelerating, if you can, your retirement plan contributions.
Bruce, 39% or so of American adults have no money in the stock market. Why do you think, I mean, some people just perhaps can't afford it, but why do you think that number is so high?
You know, Jason, I learned that number the same time you did. Someone in my department at Wealth Enhancement gave me that, and it surprises me. I didn't think it would be that high. I think some of it is people think they don't have the money. I think sometimes people don't understand stocks. And remember, stocks are just, you're investing in companies, and if you invest in smart, innovative, well-run companies, they will increase in value over time. I think some people don't trust Wall Street. It's a lot of things, but for long-term money, some of it should be in stocks for almost everyone.
And for your short-term money at this point, Bruce, what do you recommend?
Well, unfortunately, cash is paying very little interest. And compared to inflation, it's losing purchasing power. But some of our money, we don't want any risk of principal. So cash or the best interest rate, bank deposit, or money market we can find is probably still the best bet. But don't keep more there than you need to, because again, the returns are very low. When we talk about risk, people think of risk of principal, but to me, a far greater risk is a rate of return that's so low that I can't retire when I want to.
Yeah. Yep, you end up losing money by not doing anything. Yep.
Correct.
Hard to get your arms around that for some people, but with inflation, I think we sort of get it right now, for sure. Bruce, thank you. We appreciate it. Bruce is on Mid-Morning every Tuesday, and you can get more financial advice on his show, Your Money, on CCO Radio. Tune in Sunday mornings at 8.